Welcome G3 investors. Today we're going to look at how we short the stock market using inverse ETFs. If you like this video, click on subscribe, like it, dislike it, share with friends. You can reach us at our website is g3investors.com. Reach me at email at greg@g3investors.com and I will answer your questions if you have any. Okay, first of all, we use since the S&P 500 index represents 70 to 80% of the U.S. stock market capitalization, we use the SPY to identify when we want to short. And here's an example of some examples. First of all, we had a topping process here, and on this candle here we had a gap down. See the gap between these two? And substantially higher volume. So that told us that we can go short the market, or it's worth taking a shot at it. And we'll get to a minute how we traded the short of the QQQ, which is the NASDAQ 100 index. We trade other shorts, but I'm just going to use one example to show that. Now here's a second indication, and this one happened when we had a gap below the 50-day moving average, and we had higher volume. Again, failure, and then a gap below the 50-day moving average. So that was our third identifying character that we're in a correction at this point. Okay, now let's take a look at how we actually did the trades. Okay, again, when we trade, and even though we trade, we're looking at the trade of the inverse of the QQQ, which is called the SQQQ. It's 1 times the inverse of the QQQ, and which is the NDX 100 trust. You'll notice the volume is higher here. So again, when did we do it? We did it on the 2nd, February the 2nd. Okay, huge move up. Okay, higher volume. Next day we got confirmation. The candle didn't break below, didn't break below, didn't break below. Now what do we have here? We have a butterfly candle where this indicates that there's a topping, and then we have a gap below. So we stopped out at that point in time. It happened to break below the 50-day moving average on this. That's the blue line there. On this particular day, we had a gain of $1,356 or 12.6%. And then, of course, it confirmed it later on. Okay. Then we went back up here. Okay. And again, if we go to the other, we'll see that we have higher volume. And again, we're looking at the SPY to confirm that. Okay. Back here, we had a gap down on that day. So then we traded on that day, March the 1st, and look, we ended up with higher volume. That should have been, I'm sorry, we should have been here, March the 1st, higher volume, okay? In that particular case, it was a false signal, and it failed, and so we lost. Even though we bought 600 shares, we sold this, we had a loss of $690. So we have a gain of $1,356 and a loss of 6.6%. Then here, I got that, it's supposed to be right here, but that was our third signal, and that was on March 19th. So we bought 650 shares at $16.25, and we got stopped out on this big candle right here on 4/4 for a gain of $1,378 or 13%. Now, I'd be the first to point out that going short using ETFs or inverse ETFs is not for the faint of heart. And it's only a short-term trading situation. And there's a rule of shorting. You never buy and hold short ETFs for long periods of time unless we are in a bear market. And even then, you'll get stopped out. But this is just The purpose of this is to illustrate how we trade shorts, and we trade several other ones. We trade the short of the SPY, the SH. We trade a short of the Dow. I think it's SDS, and various other shorts. So it's not the only one we trade. This is Greg Gallagher with G3 Investors. Say good luck, good trading, and we wish you success in shorting when the market dictates that those are proper.